Abuja. Now, here in Nigeria, the central bank has just raised interest rates by a full percentage point to 16.5%. That's a bigger hike than expected and follows a jump in inflation to over 21% in October, with rising food prices accounting for much of the increase. The central bank also brought forward the introduction of new naira notes. The redesigned bills will be unveiled tomorrow, Wednesday. Here's CBN Governor Godwin Emefiele explaining the central bank's latest decisions.
The committee's choices were on whether to further hike rates or pause for the impact of the last 3 rate hikes to continue to feed through. At this meeting, therefore, the options considered were primarily to hold or further tighten the policy rate. The options to loosen was not considered, as this will gravely undermine the gains of the last 3 policy rate hikes. Committee Thursday voted by a unanimous vote to raise the NPR. 9 members voted to raise the NPR by 100 basis points, and 2 members voted to raise the NPR by 50 basis points. In summary, MPC voted to 1. Raise the NPR to 16.5%, 2. Retain the asymmetric corridor of plus 100 and minus 700 basis points around the NPR, 3. Retain the CRR at 32.5%, and 4. Retain the liquidity ratio at 30%.
Godwin Emefiele, who is the governor of Nigeria's central bank. Well, for more on this, let's speak to Arise business analyst Bode Oshosomi, who's been following all the developments through the day. Good to see you, Bode. So interest rates raised by a full percentage point. Did that come as a surprise to you?
Quite. Most analysts were actually expecting that 100 basis points, which is less than the previous 150 basis points we got in the previous meeting. Given, of course, the moderation in month-on-month inflation, but noting that inflation is still high at 21.09%, and also noting that the drivers are still to the upside, looking at elections, looking at the floods, looking also, of course, at the holiday season where we typically get a lot of spending. So with all these inflationary pressures and inflation still quite high, and of course we have negative interest rates, the central bank thought that, of course, the wise thing to do was to still hike, but not as aggressively. The other thing, of course, is the decline in foreign exchange reserves to a 13-month low at $13.89 billion from $37.39 billion, given, of course, the fact that we are seeing a lot of normalization in the West. And although the West are also thinking of reducing the hikes in their own rates, in their own benchmark rates, we have a trend where a lot of capital tends to be going back to the West, and that puts a lot of pressure on the central bank to keep its rates somewhat as competitive as it can. But clearly, the central bank is also cognizant of the fact that growth is still quite tepid, although it still expects 3.3% GDP growth in 2022. Doing anything more than the hike 100 basis points may also begin to impact that 3.3% number. We could actually get lower growth as a result of the hawkishness.
And Bode, the other big thing to emerge from that announcement today by the governor of the central bank is the fact that the central bank is now planning to unveil Nigeria's new naira notes tomorrow, Wednesday, rather than, I believe it was the 15th of December that was previously announced. I mean, why is it being brought forward?
Well, my understanding is that the central bank may be trying to ensure that people have enough time, few more weeks, if you like, to be able to change their money, if of course they have legitimate reasons to be able to do so. You recall that the Senate, some of the lawmakers had been calling for a shift in the deadline for the old banknotes to be withdrawn from circulation from January 15th. They were saying it should be extended to April 2023. But of course, what the central bank has done has tried to meet this request halfway, given more time for people to be able to change their notes, but at the same time ensuring that the deadline of the 31st of January still remains. And of course, the central bank is also ensuring that we don't have a situation where money is being used, money that has been kept, illicit money is being used to influence the elections. So I can see there could be a good reason why this makes sense. The important thing is that the central bank seems ready. They must really have been preparing for this for a while. They are ready to move from tomorrow. And the good thing, of course, is that any legitimate customer is able to change his money. We're going to absorb more money back into the formal system from the informal system. It's always good to have money in digital form because of the efficiencies associated with digital currency. So that's digital currency. So that is another plus. And the main role of the central bank is to manage money supply. And it needs to be able to have some kind of hold or control over the monies in circulation. And this facilitates this ability. So there are lots of pluses here. The important thing is that this has to be done in a way that is efficient. There could be opportunities for corruption as people act as middlemen to bring money into the system through the back door. But as you know, there will always be opportunities in the banks for these types of activity, and the central bank needs to be vigilant.
Absolutely. Bode, thank you very much indeed. Bode Oshosami is a RISE business analyst, and he was talking to me there about the latest developments out of the Nigerian central bank.